So the amount that you guys look into it, it goes pretty in depth, and there's been a lot of conversation recently around why wouldn't I just buy an index fund or an international index fund as opposed to trying to invest on my own and buy shares on my own or buy shares or use managed funds who specialize in buying the right businesses. What I'm trying to get at here, Chris, is like you guys, you don't even bench yourself. You don't even target an outperformance of a specific index. But so why do you prefer to invest into individual assets as opposed to buying an index?
I think it goes back to the point I made earlier around having, a very, very capable investment team. And we can spend all day, every day, sifting through the thousands of investable securities that are out there, many of which end up in those global international indices. But we just get to limit our universe to super high quality companies.
Yep.
And then limit our portfolios to those wonderful businesses at attractive valuations. In an index, you're going to own everything, the high quality stuff and the low quality stuff and everything in between, as well as the overvalued stuff and the undervalued stuff and everything in between.
Yep.
And look, that's for a buy and hold long-term investor who wants international diversification at a low cost, an index certainly plays a role. And that's been proven. And unfortunately, the reality is for our industry, the active management industry, most of us haven't earned our fees over time. And so on an after fee basis, passive index investing, there's a very strong case for it. Hopefully, folks like ourselves, by virtue of the wonderful investment team we have, by virtue of the process we have, the portfolio construction tools that we have, and hopefully some good decision making from time to time, on an after fee basis, hopefully we can do a little better than the index. But like you mentioned, we're not actually targeting that. What we want to do is deliver, attractive absolute returns to investors going forward.
And that's where it's incumbent on financial advisors such as myself to choose the right managers that we believe have long-term conviction, good resources within the company to continually outperform if we are going to use managed funds within the portfolio at all. Because you're right, there's so many out there that haven't proved their worth or haven't got what their fees are getting paid for, which is unfortunate, but it's the way the beast is.
It is, and you can tie it directly back to your prior question around competition. The active management industry has just become so much more competitive in recent decades that it's harder on average to outperform.